We are not financial advisors, nor are we broker-dealers. Securities used in these videos are examples only. Investing comes with risk. Investing options also has risk. These demo accounts may be used, but they are for training purposes only. Testimonials may be offered. Don't expect the same thing. Remember, we're all here as peers helping peers. This is not professional advice. We're here to help each other. Enjoy.
Thanks. Good morning. I'm going to hold on.
Let me do an introduction here.
Uh-oh.
Chris, good to see you again.
Morning, everybody. I hope everybody's motivated. It sounds like you are. Wanted to do a formal introduction here of Brett today. I've had him for all my classes, as you have, and I know you all know he's a great instructor and coach. Brett has been involved with financial markets for more than 10 years. He holds a business management degree from the University of Utah. And since joining InvestTools in 2004, he's helped write the basic and advanced option manual and specializes in advanced option spread strategy. Brett has been a trading room instructor for InvestTools and advanced options and basic investing of stocks. Very great course also. He's also teaching the options capstone course in Chicago with TOS instructors. He's also a member of Real Time Trades and Rocky Mountain Moneymakers and a strong supporter of the New York Yankees.
I think I might go home now.
Well, Brett coined the phrase "sweet chicken." It's one of my favorite phrases also in trading. And Draper, Utah is the financial capital of the world.
That's
Thank
right.
you, Brett.
Thank you.
Big round of applause for Brett.
Good morning. It is an absolute pleasure to be back. Not be back, but it feels like I'm back. I used to teach trading rooms all the time, and in fact taught a trading room every Friday for probably 2 years on many of the concepts that we'll talk about this morning, which we'll get to here shortly. But I think it's really impressive what the user groups have done, and for all of you to come to the financial capital of Colorado, we'll call it, Colorado Springs, to be together. It's very impressive. So I can see the dedication, and that's awesome. And you can see the dedication on InvestTools as well. Bob Kernan's also in the back. Raise your hand, Bob. You can all see him. He helps support this in many ways that you may not know. Give him a hand as well. So, before we get started, guess what we need to discuss?
Disclaimers.
Bingo! You guys have this down. And this is recorded too, so you know what I'm saying? Let's hit some disclaimers. We're not financial advisors or a broker-dealer. Securities used today are what? Examples only. Return on investment, examples only, right? Did you know that trading involves risk? If you didn't know, yesterday was an example of that. So note the risk. Prodigio, you see their paper money. We'll bring up the paper money quite a bit today. Testimonials, no soliciting, no recording, because Adam's doing it in the back. There is the mothership's disclosure, TD Ameritrade. You see their membership risk, other information as well. So long-term investing. Let's rock and roll. First question. Long-term investing. What's long-term? 24 hours. That's awesome. You know what? In fact, 24 hours for you. That's okay. Day trader. Crazy dude. All right. Long-term investing. We need to understand what long-term is, okay? And we'll nip that in the bud as we continue on. But in fact, let's start out with the market. Let's look at this for a second. This is how you may feel the stock market has treated you. That's you, that's the market, right there. Whack. My wife, when she saw that, she thought, oh, that poor penguin, he just fell through the ice. And I'm like, no, this cat right here is knocking him down. How many of you feel like that right now? Yeah? All right. So let's open up the market right now. And before we talk about goals of investing, I'm going to open up the market, and we are set to open We're actually open right now. We're down 5 on the ES. The S&P's down 5. Yesterday, what happened? We tanked, right? We went, largest loss, the 9th biggest ever, right? But we're going to have put on our take off our 24-hour hat and put on our longer-term investing hat today. And when I say long-term, we'll define that as we go along. But the question that I need to nip in the bud right now is, what is your goal as an investor? Who can share with me what your goals as an investor, what are they? Live off investments, okay, good. What else? In the back. Become proficient at investing. Okay? So, money, become proficient. What else? Over here? Consistency. Beautiful. So we've got these 3. Any other goals?
Sure. To manage my time and money relationship to make and do the things that I want to.
Manage time and money relationships to do what you want to do, right?
Right.
Go where you want to go, make a difference in the world, give back. So, something I'm hearing, and we got one more over here.
Capital protection.
Preserve capital.
Yep.
Is that important? Yeah, important to preserve capital. So here's the question that I've got. You have these goals, and this is what I want you to start thinking of right now. We're talking about goals as an investor. Your goal as an investor is to do all these things that have been mentioned, but how do you gauge success? Have you thought about that? How do you gauge success? And I heard something over here that we're going to talk about here in a second. So if my goal is to preserve capital, well, that's my first goal, but then I need to build capital. So how do I know if I'm successful or not, right? That's the question that we need to begin asking ourselves. And I'm going to build on, how many of you were here yesterday for Matt's presentation? Probably, okay, the bulk of you. So I'm going to build on what he had to say and maybe dial it in even a little bit more as well. And then he'll pick it up later this afternoon. But the goal is beating the market. Now I have a clock here, or a kind of a stopwatch, and let's talk about beating the market. The Olympics. Let's talk about the Olympics for a second and say a sprinter. If you're a sprinter, you're ranked number 1 in the world, and at TD Ameritrade we're an Olympic sponsor, and we had David Oliver, who is ranked number 1 in the world in the hurdles. He came out to the financial capital of the West, Draper, Utah, and he talked about his goals as an Olympic hurdler. And he based it, he said, here's the world record, here's what I want to beat. So what's his benchmark? The world record. What does he focus on? Beating that world record. Now, I'm a University of Utah fan, right? We're going into the Pac-12 this year. What do you think the goal of the University of Utah is? The Pac-12 championship, right? Okay, let's move to the New York Yankees. 27 world championships. What's their benchmark? If they don't get it, New York goes nuts. Number 28. They have a benchmark. Everywhere in this, there's these stopwatches, we'll call it, everywhere. The goal, the question I have for you is, what's your benchmark right now for the market? And if you don't have one, hopefully you'll have one by the end of today. What are you trying to beat, and what's your system for beating that, right? And that's what we're going to hit on in large part. So we've talked about a few of those, and Matt may have mentioned one yesterday. And in the old Friday capstone that I used to teach, certainly we had one. But here's 2 that could be benchmarks for you. There's the S&P 500, which is U.S.-based stocks, right? 500 U.S.-based stocks. And then you've got what's called the ACWI, the All World Country Index. It's an ETF that tracks the world. I would say, and I can't recommend anything, and you may pick other benchmarks, the NASDAQ if you're a tech lover, right? Something like that. But you have to have something to see if you're succeeding in the market. You have to have something. Now let's talk about success in the market. We're talking about beating a benchmark, And this goes to the psychology that Pat's going to talk a lot about tomorrow. If you're not up for the year, think about the way you're doing it right now. If you're not up for the year, was it a successful year or not in the market? What's that? What do you mean? It depends on the market. If I don't make my 15% this year, complete failure. Yes or no? Not necessarily. It depends on what the market did. So I want everybody to make, if this is a problem for you, make the switch right now. We're not basing success on positive returns. Okay? If it's raining outside and David Oliver's doing hurdles and he finishes in first place, but it's raining and he finishes under the world record, right? Think about that for a second. Something got in the way. Something prevented him. It's raining, right? Same thing. If the market rains and the market's down 10%, but we're only down 5%, successful or not successful? Yeah, it absolutely is successful, especially in this long-term portion of the account. So everything that we need to do is going to be based upon what that benchmark is, S&P 500, the ACWI, whatever it is. Okay? That's the first thing that I want you to take away, and if you don't have it, write it down. Number one, you need a benchmark. Okay? Now, let's talk a little bit about long-term investing for a second, or about that side of the account which you deem to be long-term investing. We have many classes at Invest Tools. You've got, Dave Johnson's 4-day. You've got the high probability trading class. You've got, trading, whatever, basic options, advanced. You got all this stuff. And I'm going to split up our account into two different sections. And I'll share with you, plus or minus, right, a few percentage points, how I'm currently approaching it. You've got what we call the stay rich, and then you've got what? The get rich. Now, I would say, and let's split that up, get rich. Dave Johnson's 4-day live class, or his swing trading, which side do you think that's on? Get rich. So you have, I'm just going to put DJ. You have high probability trading. Guess where would that be? Okay. I'm going to put it over here, HPT. Okay? And I'll share with you why here in a second. Basic options. I'm going to sell a vertical every month. Okay? I'll put AO, BO. Staying in the market for 24 hours like the good fella in the back. Get poor, she says up here. Not if you're short yesterday, right? You could have made your year, right? But that, I'll put FX futures over here as well. So you've got this get rich side of the account over here, and you've got this stay rich. Well, what's the stay rich side? Stocks. Okay, bonds. And with stocks, we'll put ETFs. Okay, there could be some option strategies that you could use on this side, right? Covered calls. You could sell short verticals against this type of thing, but that's maybe gold or whatever, that kind of thing. So, what course is this in the wonderful world of Invest Tools? We've got two that really support this right now. One is Portfolio Strategies, brand new course. The other is, guess what? Introduction to Trading Stocks. Now, I help build, with Pat's help, high probability trading, and with Sosnoff, and we have a lot of fun. And when we first put that on, we'd have everybody, and tell me if this fits what you did. You said, you know what, screw the stock thing, I'm going to options. And you jump over and you hurry to options and you're in high probability trading and you're just loving it. And you're thinking, yeah, this is great. But you know what the problem was? You're probably using, I'd say 15 to 20% of your money in that strategy, which, by the way, is the recommendation. That's where I'm at. 15 to 20%, maybe 10 of that's in HPT and 10 of that's in the Dave Johnson swing stuff. But that's all you're doing. So what? And you're spending night and day worrying about